It's still possible. So if we see a weakening dollar, I think you could have one more move up on Ethereum to the 200 moving average right here. I think long term, this is a good move for Ethereum. I don't think in the near term, I think in the near term, you could say that the rally, Ethereum rallied from under 900 to over 2000, right? So, that's a huge over 100% move versus what Bitcoin had, this very, very minor percentage comparative move to the upside. So I think that, again, a lot of that upside was the merge. People getting excited, buying in, saying, oh, this is going to be a game changer. My one worry would be that once it happens and it changes the long term of Ethereum, but the fear and greed and fear right now is kind of ruling things. I would worry that there still is downside on Ethereum until crypto, until Bitcoin bottoms out, all of these things bottom out. It could still be under pressure. Now, maybe it doesn't go percentage wise as low. Maybe it holds this low down here. We'll have to see. But I do think, after the merge, I do think we'll see some sort of rollover. I think that's still possible. So if we see a weakening dollar, I think you could have one more move up on Ethereum to the 200 moving average right here. But once that kind of hits, my guess is we'll then see the rollover occur and it kind of starts to head back down. Not really. I think Solana was looking really good earlier today. It was starting. It's holding this key support line, and again, it'll be interesting to see if it's able to get off of this line. But just like Bitcoin, it's kind of holding that big support line. Avalanche, same kind of situation there. Both of these were looking better. Now they're kind of stalling out a little bit, both in the lower ranges of the chart. But again, I think at this point, it's important to just take it very carefully. Like if you're swing trading cryptos, I think that's fine to do like a Solana, an Avalanche, a Cardano, a Polkadot. But if you're looking longer term, stick with the best of breed with Bitcoin and Ethereum, because you just don't know which ones are going to survive the regulation, right? We know that Gary Gensler has said, except for Bitcoin, most of these are securities. What does that mean? What kind of regulation are they going to have to abide by? And then will other technologies from other coins take better precedent? Will they take over as well? So for me, when I'm looking at my long-term HODL portfolio, I'm just trying to stick to the best just to be safer. Talk about gold. So this is a cool move on gold today. Number one, we had a nice little double bottom here. Gold, again, had been in a sell-off with the dollar, sharply moving to the upside. What I liked about today's price action, and this is just relevant to today, is that we saw this big move up on an intraday basis on the dollar. So the dollar early in the day was down, which caused a surge in gold. And then the dollar ripped higher on that Nord Stream news, and gold actually held up. And that's something that I pay attention to, because that's something that's not supposed to happen, and it shows relative strength in gold. So again, we'll have to watch and see what happens next week. But right now, that's telling me that there's some positives here in the gold market. You can see some of these gold miners, like look at Newmont Mining here. Newmont Mining having a good day, but the stock has just been decimated, down from 86 or 87 to about 42 here. To me, these are very interesting. I like beaten down quality miners that, everyone is just throwing them in the trash, but they're still quality names. And so I'm like, all right, well, what's a small amount of money in these if they start to have a big bounce, if gold starts to perform? So I think gold, again, I continue to think gold is probably the safest place for us to be as investors. It's not the sexiest. It's not going to make you 100% in a couple days or weeks or months.
Right.
But sometimes preservation of capital is a lot. That means a lot.
Well,
into this year. In fact, you can even argue that you've gained on gold, and I'll show you this really cool example in a second. But basically, gold has gone sideways. I think it's down a few percentage points on the year. But when you compare that to what the S&P is down, or what Bitcoin's down, or what Ethereum's down for the year, it's awesome. Like everyone in the world would say, oh, I would have rather have been in gold. But the kicker is this, right? So gold is down about 5% for the year. We started the year on gold around 1,800. We're at 1,713 right now. So pretty minor move. But what's amazing here is look at the dollar. The dollar since the start of the year has gone up about 17%. So in a normal world, you would say to yourself, okay, well, if the dollar goes up 17%, gold should be down 17%. But instead, gold is only down like 4 or 5%. And so you've actually gained buying power by being in gold. It's very cool. Yes. Yeah, you're right about that. So there's no doubt that, and you can see the way assets react to this, right? So the Fed likes the fact that the dollar is pushing assets prices down, but at the same time, it's hurting the economy. Now, we all like the fact that the dollars we hold are worth more. It's nice like that, right? Everyone's hearing about inflation, but in reality, the dollar's actually gotten stronger relative to other currencies. But in the long term, you don't want that. In general, companies do better with a slightly weaker dollar. A lot of companies like IBM, they reported earnings not that long ago, and they lost $3 billion because of currency conversion, meaning they sold something in yen, and by the time they converted it from yen back to dollars, the dollar had spiked and they got way less dollars for that yen. And so it actually causes a lot of losses for these corporations, which then translates to lower earnings, which then translates to lower stock prices. The best scenario, by the way, is a stable dollar. Like what's going on, by the way, what's going on in the bond market is ridiculous. Like historically, this is unprecedented.
Talking about treasury bonds?
Yeah, to see the moves in yields like they're moving. I mean, holy cow.
It's manipulated.
That should scare the crap out of everyone because that tells you the system is broke. I agree, and I would even dare say that the bond market is calling Jerome Powell's bluff in terms of Jackson Hole. Even though we've seen bond yields go up recently a little bit, they're not above where we were in June. And so even though you had this ridiculously, probably most hawkish comments from Federal Reserve Jerome Powell at the Jackson Hole comment section, you didn't see yields make a new high. And so what that's telling you is that the bond market is saying, no. You're talking a tough game here, but you're not going to be raising rates higher than what we expected in June. So silver has actually hit a major level here. You have, number one, this channel, and we've just pierced the low end of the channel. And you can see when you were down here, you bounced to the high end, then you pulled back, high end, back down. Then we hit the low end, we bounced, and then here's the low end again. So basically channels are wonderful because they give us general levels where you should start to expect a reversal in price. Then you add in this trend line connecting the high from 2016 through the high from 19 and the high from 20, and you just touch that as well. So this should be a pretty decent level of support on silver. So I actually think silver is really attractive. We are getting a bounce in silver. It's off of its highs. But I actually like silver here. I think it makes a lot of sense. Yeah, so at least on oil, what we are seeing is that you're sitting on support here. You can see this pivot high from 2021. That is what we hit here. We then bounced, and now we're back down to it. My guess is we're going to break lower in oil and head to the next major support, which actually all the way goes back to 2018. And this is kind of where I see oil being going into the midterms, maybe just after the midterm elections, around $76 a barrel. So I've been, ever since we were at 130 to 120, I've been a bear on oil. I never understood the thought process of like, oh, Russia's going to be, pulling all their oil off. Russia needed the money. They always did. They're just selling it to Russia, to China, and to India at a much cheaper level. But it's all the oil's going onto the open market. And then you figure out that the global economy is slowing. And it's like, okay, well, slower demand, equal supply as there was, price should go down, and it has gone down. Reserve release, they had to do it, right? Not only to help people, but just to, talk about an unpopular president until maybe the last couple months, and he's still relatively unpopular, but right. they got a few wins under their belt, you could argue, before the midterms, which is what they were trying to do. And that, by the way, that's been one of my talking points for why I didn't believe oil was going to go higher anyways, is because I've been around for 20 years, and every midterm or presidential election, if oil was spiking prior, it always pulls back going into these elections. Doesn't matter if it's a Republican or Democrat, it's just, that's what they do. They make sure that they get those oil prices down so people are happier. So S&P 500, nasty reversal today. We do have a lot of support that we tagged yesterday, and we had a good reversal day. So I think I'm watching very closely to see where do we go today into the end of the day. Do we take out yesterday's lows? Do we hold it? If we hold it, you have a possibility of a little short-term bounce, but the market's going lower. The bottom line is you're going to get bounces. We're in a bear market. Bear market rallies are known for being rip-your-face-off rallies like this one was. But eventually you get the sell-off again, and you'll make lower lows. And I still have a target of basically the pre-COVID highs of where we're headed, probably by year-end or early 2023. until we get more clarity. So I think the keys to a crypto bottom are, number one, partially a pivot of the Fed. So once the Fed's done hiking and the dollar starts to kind of top out and pull back, that's number one. And then I really think regulation is unbelievably important. I think regulation initially will be viewed with fear, but one thing I've learned from Wall Street that translates over to crypto is that whether it's good or bad, the investors want to know the facts. Like, what rules do these companies, what rules do these cryptos have to abide by? And then you can see bigger money coming into the space. But there's no way. I mean, you're not going to get a pension fund that has $5 trillion to allocate anything to crypto without more understanding of
clarity
what rules there are. So, I mean, it's going to be a while. I would say this is the next, basically into year end, I'd expect some pretty wild action. And then I really do hope we start to get some of these things out of the way. I mean, let's get that final flush in crypto. Maybe it coincides with some regulation. We get kind of some clarity on things. And then even as an investor myself, then I'll start allocating more money to crypto. But I'm not going to commit a ton without knowing what Gary Gensler is going to come up with.